Okay, in this video, we're going to demo how to sell a covered call on American Airlines. So I have Yahoo open here, chart, and I've customized the chart to show the Bollinger Band. And with Yahoo, when you display the Bollinger Band, you also see the 20-day moving average, which is this black line. I also added the 50-day moving average, which is the red line. And I also had it show me the RSI, which is this down here. So if I own 100 shares of American Airlines and I'm looking at this chart, I may say to myself, this is a good time to sell a covered call. And the reason why I say that is because the RSI is getting up there close to 70. It's at 66. It was 70. It looks like it came down. If I hover right in here, it looks like it was 70, 71. And that means things were overbought, meaning that there's a high likelihood that the stock is ready to turn around and go the other direction, which you can see that it already sort of has. It's been trading at the top of the Bollinger Band, forcing the band higher. So does this mean that American Airlines is going to go down price 100% positively? I don't know, but how much higher will it go? So by looking at this, if I'm selling a cover call and say I own 100 shares, and let's say my basis is, let's say, 1350, just for the sake of this over here, around 1350. And I'm thinking to myself, I'm going to sell a cover call. If it gets to like 1550 or in that range, somewhere in there, I'd be happy collecting the premium and also selling those shares for $2 more per share than what I paid for it. So I'd make another $200. So I'd make $200 in the share price plus whatever premium is available. So we've determined that. So let's go look at Robinhood and see what we might have. So up here, I typed AAL, American Airlines, and you search for it, and you come up with this. And you can click on the 3-month tab here and see that American Airlines has kind of been going up, and that's all fine and dandy. So let's go ahead and click on trade options here. So remember, once again, everything we're doing, we're selling. We're selling everything. We're only buying when we've already sold a contract and we're going to buy it back later. But that's not what we're doing here. We always sell to initiate the contract. And in this case, we are selling a covered call. So we have sell call. And I'm going to change this expiration date to January 16th, which is the third Friday of January. So this would be considered a monthly option. So there's a lot of volume here. And the bid and the ask should be a pretty close gap. So let's go ahead and click on that. And Robinhood kind of snapped the trading prices right here, kind of snapped right in the middle here where it's trading. Remember, when you do a cover call, you're picking a strike price above the current price. Cash secured put, you're going lower. Cover call, you're going higher. So I was looking at 1550. However, there's not a strike price at 1550, but there is one at 16. So let's move this just a little bit. So we have 15, which is a 52 delta, which means there's a 52% chance approximately that if I select this one, it's going to hit that price and I'm going to sell my shares at 15. Well, the price is at 14.95. So the strike price here is too close to the trading price. Now you could do that if you wanted to just make some premium plus sell the shares. That could work, but you're talking about waiting a month for that to happen. So probably not what we want to do. So let's look at 16 here. So 16, delta is 32, meaning there's a 32% chance it's going to happen. Let's approach this with the assumption that you like these shares and you think it's going to appreciate a little bit, and you kind of prefer to hang on to them rather than sell them. So if we look at the $17 strike price, the delta is 0.18, meaning there's only 18% chance that if you pick this strike price, your shares are going to get taken away. But if they do, remember, we assume that we paid $13.50, so you'd be profiting $4.50 off the shares. So that'd be a $4.50 return. So if you do the math, that's quite the lucrative return for 5 weeks on American Airlines. Now, we haven't talked about the premium yet. So the premium for this would be $16. Now, that's not crazy amount of money, but remember, this is kind of a practice run. So if I'm talking to my daughter, I'm giving her advice. Let's say she did a cash secured put a month ago, and now she owns 100 shares of American Airlines. Let's say she got those for 13.50 or 13.50 wasn't actually a strike price, so we'd have to say like 13. If this goes above 17 and she can get $4 a share, plus also make another $16 in premium, that sounds pretty good. So let's go and just click here and expand this out and see what else we can see. So we see the delta here. Bid and ask, there's a little bit of a spread there, 16 cents and 19 cents. So remember, we're selling something, so we want to try to get as much as possible when we're selling. Volume here in the open interest 22,000, that's plenty. Volume 481, so there's a lot of activity, so that's good. So let's go ahead and click right here and collapse that again. So we're going to assume that we're going to do 17 here. We're going to kind of play it safe. And we're going to review some things. Strike price 17. Credit would be $16. $16 profit. Maximum profit 16. So let's continue. Now it says review order. Get that back where it was. 17 here. So we have one contract, which is 100 shares. So this we're going to try to adjust. So the bid is 16, ask is 19. Remember, sell high, buy low. Buy low, sell high. So let's see if we can change that to be realistic. If I put 18 cents in there, I could probably sell this contract for 18 cents, which would be $18 profit. I could stick 19 in here and then try it and then just wait and give it like 2 or 3 minutes. If it doesn't get filled, I could come back in here and adjust it and change it to 18 and try that, see if that works. And then if I want to keep going, I could do 17 cents and wait and see if that works. Like I said, 1 cent here only means $1 times, 100 shares, 1 penny, 100 shares. But there's times when this gap can be as much as $1. And so you really want to try to do the higher price, get as much as you can. So something we haven't really talked about was time and force. So this is good for the day. I could click this and I could say good till cancel, which means this order will stay here open, waiting for somebody to take my deal. Now, I don't do that. However, somebody could do that and try to plug a bigger number in here. I could sell this for like a quarter, 25 cents, and put good till canceled, and then just kind of wait a couple of days to see if something crazy happens and it gets filled. Probably won't, but it could. So let's go ahead and review the order. So the account that we're in, 100 shares, one contract, good for the day, credit. Now here is a problem. I don't actually own any American Airlines shares in this account. So I can't actually complete this. But this is to the point where I would complete it. If I did have 100 shares, this message would say, you're agreeing to sell 100 shares of your American Airlines stock in blah, blah, between now and January 16th. And this would say submit. If I hit submit, I actually initiate that contract to sell a covered call and wait and see if it's filled. And if it is, I'm the proud owner of a contract. I made $17.98 and I sit and wait for the time to tick away till January 16th and see if the price goes above 17 and see if those shares get sold or if it expires worthless, or if I decide in the meantime that I want to end the trade earlier, I could. So in that case, if the price just stays at 14 for a couple weeks, I might have the opportunity to come back in here, buy that contract back for maybe 3 cents or 2 cents or 5 cents. And the reason why I want to do that is to free up my collateral, which is the shares of stock, and maybe do a different cover call at a different strike price with a different expiration. So there you have it. That's how you would do a covered call if you own 100 shares of American Airlines stock.